Administration. On behalf of KMA Management Association, we extend a warm and cordial welcome to each one of you to the 9th edition of KMA InsightX.
The InsightX Series has always been a forum that brings together industry leaders, management professionals, and intellectuals to discuss contemporary trends shaping the business world. We are truly delighted to have such an esteemed audience gathered here today to share experiences and insights and to provoke meaningful discussions.
In this evening, we are privileged to focus on a theme that is both timely and relevant, from Wall Street to Dalal Street, emerging market opportunities in a volatile US policy cycle.
Before we commence the proceeding, may I request everyone to kindly rise for a moment of silent prayer.
Thank you. To deliver the welcome address and to introduce our distinguished speaker for the evening, may I now invite Mr. Dileep Narayanan, Vice President and Chair, Kerala Management Association. Sir, please.
Good evening. Before I begin, today we had a sad news of the passing away of Mr. Piyush Pandey, the veteran in the advertising world, former chairman of Ogilvy India, and the world acclaimed creative professional. Let's observe 1 minute silence in view of this great marketing professional India has ever produced. Thank you. Distinguished Chief Guest, Mr. Gaurang Shah, Honorary Treasurer, Dr. Anil Joseph, past presidents, managing committee members, invited guests, dear KMA and student chapter members. It's my pleasure to welcome you all to this 9th edition of KMA InsightX of this KMA year. And it is very encouraging and terrific to see such a packed house Friday after Friday for KMA programs. It's very encouraging and gratifying for all of us at KMA to see such large turnouts. Thank you. And your feedback on the previous editions of InsightX has been encouraging. Please continue to provide us the input so that we can curate the programs to suit your professional and personal advantage. Many members in the past, especially in last 2-3 months, they were asking about us to address the issues related to the recent policy shifts from the US administration, often volatile, sometimes very fuzzy and puzzling. We chose to wait for a bit to get some clarity, because things were changing on a daily basis. And now that at least some contours are clearer, we are kicking off a mini series on what some could call as Trumponomics after effects. Today we will hope to hear on the investment angle. In the next month, we are trying to take the perspective of manufacturers and exporters and tariff experts. We'll have a program in the month of November. So in that context, I'm greatly privileged and happy to welcome our speaker for the day, Mr. Gaurang H Shah, Senior Vice President, Geojit Investments Ltd. Gaurang began his career in 1993 and has been with Geojit since 2004. He is, you must have already been recognized him. He is recognized as a face of Geojit on leading business channels such as CNBC Awas, ET Now, NDTV Profit, and many more channels. In the national television is a daily kind of, you could see him. He tracks global cues and their impact on India, follows foreign institutional investors, watches policy signals, and keeps a close eye on gold and US dollars and Indian INR rates. He also conducts investor awareness programs across India and the Middle East. And ABK was telling about he's known to drop a line of shairi when the moment calls for it. Tonight's topic is very timely. From Wall Street to Dalal Street, emerging opportunities in a volatile US policy cycle. Mr. Gaurang will share his views on the evolving backdrop and what it could mean for India and other emerging markets. We will listen for key trends, risks, and possibilities that matter for all of us. Before I invite Mr. Shah, a few quick announcements as President is away today. He unfortunately could not join us today. We have on 30th October, we have KMA Digital Summit at Lulu Tin Tower under the leadership of Chair Mr. Ramesh Nair and Advisor A. Balakrishnan. We have curated an excellent program on 30th October. Those who are not registered, please do register and participate. On 31st October, at the Rakka Club, Kakinad, Young Minds are having a session by Mr. Nipun, a fitness influencer, is speaking. Thank you, Chair Bibu and Bibu Punuran, past President, and Mr. Nivedit George for organizing this program. And on 8th November, our District Collector, Ms. G. Priyanka, IAS, would be inaugurating the KMA Finishing School program. Chair Mr. Abraham Molikal, a Managing Committee member, had crafted an excellent finishing school program. Those who are yet to register, or you can share those information about the finishing school to the campus, the students, the final year students, management students, to join this program. The next edition of the 10th edition of InsightX is on the 14th November by Ms. Archana, streaming veteran and a pioneering streaming veteran in India. We seek your continued support, participation, and registration for all these events. And once again, thank you for being here and keeping KMA very vibrant. Ladies and gentlemen, it's my pleasure once again to welcome, and please join me in giving a warm welcome to Mr.
So my good friend Dileep mentioned there is clarity as far as Trump tantrums are concerned. I don't think so. We have still more clarity to come through, because every day there is a new statement that has been made by President Trump with respect to whatever he said in the past and what he is likely to do and what he is doing right now. For example, on H-1B visa and F-1 visa, there was this announcement of $1 lakh fees. Now there is some clarity that has come through, and that's actually a sign of relief for some of the Indians who have gone there to work. So clarity is still coming deep, and it will definitely come much more. So having said that, well, first of all, would like to thank KMA for inviting me. And I wouldn't have been here but for one person, and that's Mr. Balakrishnan, whom I very fondly call ABK sir. Thank you, ABK sir, for this. Respected members on the dais, ladies and gentlemen, good evening. Just for my clarity, I see a lot of students over here, and I'm hoping that most of you all are aware about what stock market is all about. Most of you are aware about stock market? Yes? Okay, great. So that makes my job a little bit more easier. So to start off, it's been a pleasure to be on this ninth edition of InsightX. Uh, the title that was given was From Wall Street to Dalal Street, Emerging Market Opportunities in Volatile US Policy Time. That made me come to a thought process that I built up, and that thought process made me to pen down one line with respect to what the headline is this evening, and that is Wall Street is history, Dalal Street is the future. So this is what I believe in very strongly for a very long time, despite of the kind of headwinds that we've seen, not only in the recent times but also in the past. Uh, our markets have matured to the next level. So before I go to the markets and the specifics, let me throw some highlights as to what our thought process has been at Geojit in terms of specifically the circling round Trump tariff tantrums and the policies and what is likely to happen. So, it has been some time since President Trump made the announcement on 2nd of April, if I'm not mistaken, 180 plus countries and a list of tariffs that he drew down. Including India, there are a lot of other countries which have faced difficult times. We had to face a little bit more difficult times because of our dependency on Russian crude oil and natural gas, and thanks to that, additional 25% tariff was levied on India, bringing it to a total of 50%, and so on and so forth. Well, there has been some direct impact of these tariffs on certain sectors, and on certain sectors there has been an indirect impact. Now, unfortunate thing is that when President Trump signs an executive order or he makes an announcement, it is not in totality. Clarification starts following after a couple of days or weeks, and that leads to a little bit of more confusion rather than clarity. So, hoping that there is going to be a decisive resolution, especially with respect to India and US as far as the trade agreement is concerned. I'm sure most of you all would have read over the last 24 to 48 hours that the talk between India and US as far as the trade agreement is concerned has reached to the finalization stage. I hope it happens. Most of the people are thinking that possibly by this month end or as early as first or second week of November, a trade agreement between India and US will be in place. If there is going to be a resolution with respect to the geopolitical situation between Russia and Ukraine, then the first thing that is going to happen is withdrawal of that additional 25% tariff that US has levied on India because of Russia connection. So then we stand at about 25%. Then there are certain red lines which India has drawn with respect to aquaculture, with respect to dairy products, with respect to agriculture. Now that is where there is a little bit of difference of opinion, but according to some news channels and source-based news flows, there also a lot of progress has been made. Eventually, what we have been given to understand is that possibly by mid-November or post-mid-November, if everything goes well, and if the trade agreement is signed between India and America, then the tariff percentage would be somewhere between 15 to 16%. This is source-based information. A lot will depend upon as and when the progress is made in the couple of weeks to come by, and then we have a final signed, sealed, and delivered trade agreement between India and US. But till that time, there will be a lot of confusion. There will be a lot of clarity that will come, which will possibly make us even more resilient as we go forward into the future. Let me throw certain examples. Our textile sector, our EMS sector, our gems and jewelry, IT, pharma, and to certain extent autos. These are the primary sectors which are under radar because of the US tariff which has been put upon. There is clarification coming through, but it is not enough to say that everything is out of the woods and now we are having a very crystal clear path in front of us. There is also a sense of a little bit of negativity on account of tariff because of the difference of opinion and the statements that has been made by President Trump. It will have to be dealt with a little bit of cautiousness. And let me say one thing over here very clearly, sir. Between the two countries, I think India has reacted very maturely compared to the kind of statements that have been coming out from the President Trump and his members in the Trump administration. I'm sure most of you have read and heard about what kind of statements were made, that India and China is a dead economy, etc., etc. Well, if it was a dead economy, then no American company would want to come and set up the shop in India, to be very frank. And there are lots of them who are waiting to come and open up their manufacturing or services activity in India. So possibly, as everybody knows, that President Trump is known to arm twist his way and getting his way out. But our government has stood very strong with respect to our sovereign rights and with respect to our honor. And giving into the way some countries and some leaders have given into demands that have been made by President Trump. For example, you must have heard about European Union, the kind of agreements that were signed by the European Union and by US. There was a lot of criticism as far as that trade agreement was concerned. So while both counterparts and their respective dignitaries are working towards enabling a smooth trade between the two countries, our government has gone ahead and stepped up to look at new geographies. One thing that President Trump has made us understand and learn is that depending on a particular country for large part of our exports can turn out to be not so productive. Hence, very recently, India has signed a trade agreement, an FTA, free trade agreement with UK. Indian government has signed agreement with European Union, 4 countries, and with the entire European Union. I think within another week or 10 days, we'll have a free trade agreement in place. India is also talking to countries like Australia, New Zealand, Middle East, African countries to diversify from the dominance that US used to have in India's trade agreement or trade policy. India's total export to US specifically is a small fragment of percentage compared to the total GDP. This by itself is a huge, yes, with respect to services, IT, there is a little bit of more dependency, which again the government is trying to resolve over a period of time and deviate from that US-centric policies to different countries. My view as far as this entire episode is concerned, friends, that it has actually made us realize and has made us a little bit of more matured economy rather than giving into trade tantrums and policies which are thrown at us that take it or leave it. Either it is my way or highway. That's the kind of approach that President Trump has in certain policies that he's put across. This is also a personal take, friends, that tariff, what is so in US, the Congress actually asked Trump administration that who pays the tariff? That is the big question. So my understanding, friends, is, and I stand to be corrected if I'm wrong, once a tariff is implemented on any particular country, that means the cost of goods or services which gets landed into US goes up. When the cost of goods and services which lands in US goes up, who pays for it? It is the American citizen who pays for it. And already there is a lot of protest in US against these policies of President Trump, because the cost of living, cost of healthcare, cost of normal goods and services which are otherwise available at a very lower level has gone up. And this has created a very unpleasant situation within the United States of America. So it's nobody else but the citizens of America who will have to finally pay the price in terms of tariffs going up. And this will lead to a final blow to the Trump administration, because though the interest rates were likely to go down in US, but because of these tariffs, Mr. Powell was forced to make one announcement in terms of rate cut. He is now holding on. Mr. Powell is the Fed chairman who takes the final decision about interest rates in United States of America. He made one rate cut, but now he's going to wait and watch, because eventually, if cost of living is go up, inflation is going to move upwards, and that will make a very difficult choice for Fed chairman Mr. Powell to give another rate cut. Though he said that there will be 2 more rate cuts coming in this year by December 25, but it looks difficult according to the data points which have been emerging out of United States of America. So it's a wait and watch situation right now. But it also opens up plenty of opportunity. For example, the BRIC, I'm sure you all must have heard about BRIC committee, BRICS. That has come together strong. The dominance that US used to play earlier is not now going to come in the future, in the present and going into the future. So this is going to lead to a lot of positivities for not only developed markets other than US, but also more for emerging markets. For example, India, China, and rest of the pack in the emerging market. There is also a belief, friend, that the dollar dominance, which was there up till now, is also going to go down. Dollar is going to lose its dominance. And when that happens, world will look at an alternative universal currency. That will take some time to possibly develop and evolve over a period of time. But one statement that has been made by the BRIC countries and the leaders of BRIC countries is that there is the most likely possibility of a common currency between the BRIC nations coming through, which will possibly take over the dominance of US dollar over a period of time. So the question of optimism as far as India is concerned comes from where? I'll take you to a recent past history. I will not dive into a lot of deep past history. I'm sure every one of us are aware about the year 2020 when COVID happened. This COVID-19 or the Wuhan virus, according to me, was something that none of us have seen it. It has happened after a long period of time. Even before that, when demonetization happened, there was a lot of negativity with respect to Indian economy, India's growth story, India's inflation, etc., going above the roof, and possibility a lot of people made a statement that the demonetization would actually set us 5 years behind rather than taking us 5 years ahead. And we all know what the present situation is, friends. So during demonetization or even during implementation of GST is concerned, there was a lot of negativity. We emerged as winners from there. Even during COVID time, friends, there was a belief that India will be one of the worst suffering countries with respect to the situation that COVID has created. And the fact of the matter is that we took some time, but we have emerged far better, far matured, far stronger, and far challenging than what the situation used to be. My positivity as far as India is concerned comes from a couple of things that has evolved over a period of time. Let me give you certain numbers, friends. You know, most of us are worried, especially when it comes to equity market. There was a dominance as far as foreign institutional investors are concerned. I will give you certain numbers which will possibly surprise most of you all. Foreign institutional investors started selling in India from last year, October 24. Up till December 31st, 24, these foreign institutional investors sold almost about close to 2,50,000 crores plus. This was only in October, November and December last year. From January 25 till about last month, they have sold an additional 2,25,000 crores plus approximately. This kind of sell-side figure, friends, has not been there in history in any of the emerging market. And despite of this kind of selling that FIs did, we are virtually trading at an all-time high rather than trading at an all-time low. What I'm trying to drive home, friends, is that gone are the days that we used to depend a lot as far as foreign flows were concerned. The common person on the street has today become much familiar with respect to the knowledge that he or she is getting in terms of getting attracted towards an asset class which can give him or her a decent rate of return. I'm sure most of you all must have invested in FDs, bank FDs, am I right? Most of you all must be having bank. What is the kind of return that you get in your bank FD per annum? 5.5, 6. If you're a senior citizen, you may get a little bit more. Now I'll throw a very simple mathematics at you. Say for example, hypothetically speaking, you're getting 6.5% return on your bank FD per annum. From the 6.5%, you minus inflation. Okay? And from that, you have to minus tax. What are you left with? Are you left with anything? Maybe yes, 0.25 or 0.5%, depending upon your tax bracket. Now with this kind of savings in bank FD, are you able to secure your future? So to secure your future, what you need to do is look at certain asset classes which can give you a better return. Can you give me any idea what are those other asset classes? Of course, other than gold and silver and platinum, which has been moving up for the last 1 or 2 years. Do you have any idea as to what are those different asset classes? Mutual fund. That is related to equity market. So now, here is the thing. Here is my take. On a very conservative side, friends, of course, let me be very honest this evening. In the last 1 year, that is from last Diwali to this Diwali, Sensex and Nifty has given you just 6% return, 6 or 6.25% return, which is lower than your bank FD also. But when you look at sector and stock specific, then equity market has given you in excess of 15% return, provided you have been able to understand and identify those growth opportunities, sectors and companies, and getting invested from a long-term point of view. So our rough estimate from now onwards, because from now on we believe that whatever has happened in terms of policy changes, at least in the last couple of months, starting with the budget announcement made by the Honorable Finance Minister Srimati Nirmala Sitharamanji, 12.75 lakhs if you are earning, you have to pay zero tax, am I right? After that, we had a very decent monsoon. Monsoon is very important for India and its economy because large part of our population is associated with agri activity. So whenever we have good monsoon, there is good agri production, and this year it is expected that our agri production is going to hit a new record all-time high in terms of agri output. So you had good monsoon, so the income of semi-urban and rural population which is associated with agri activity is going to go up. Their spending power is going to go up. Their ability to save and spend is going to go up. And now very recently, on 22nd of September 2025, we had the new avatar of GST in form of GST 2.0. All these things, friends, is going to translate into consumption. Remember, there is something called C square. What is the C square? C square is consumption, and when consumption goes up, capacity, capex goes up. So these two go hand in hand. Our understanding at Geojit is that from this month onwards and going into the future, that is October, November, December 25, and then from next year onwards, consumption is actually going to pick up because the ability of a common person to spend is going to go up, which will again lead to a very decent growth in terms of corporate earnings, in terms of GDP run rate. And along with that, friends, let me tell you one thing. India is the only country as of now amongst the developed market and emerging market where inflation is coming down and interest rates are coming down. Globally, countries are struggling with keeping inflation low and getting interest rate cuts. But whereas in India, we are in a very sweet spot. Our estimates say that the next credit policy, there is going to be an announcement made by the Monetary Policy Committee of another 25 basis point cut, which is translated into positivities in terms of interest that is paid by you and me and corporate India will also go down, which will actually add to their profitability and the savings also going up. Along with that, friends, even if, see, IMF has projected a run rate of 6.6% GDP growth rate for India. Okay. there is, forget about 6.6%. My take is that even if we do a 6% GDP growth rate, there is not a single country that can come and stand shoulder to shoulder with India as of now. And this is just the beginning. As we go in terms of our earnings growth, as we go forward in terms of government policy changes, as we go forward in terms of aspirations to make India the next trillion-dollar economy, aspirations to make India the next manufacturing hub, big manufacturing hub, all these translation will bring in a lot of positivity, and all those FI money that we actually saw outflows last year and this year will eventually start coming back into India. But I am saying that let us not have FI flows. Our domestic institutional investors have enough liquidity to face any kind of uncertainty as far as FI selling India and buying China or Malaysia or Thailand or any other country is concerned. Had it not been for the domestic institutional investors supporting the market trends, we would have been closer, we would have corrected possibly 35, 40 or even 50%. But the fact of the matter is that we are trading close to all-time highs, not trading close to all-time lows. So my understanding, friends, is that if you have the ability, see, there is one thing that I would like to make very clear. If you want low risk, you have to take low return. But if you want high return, you have to take high risk also. But that risk also has to be very, very calculative. Not necessary that you have to go and put your money in XYZ company which you are not aware of, or put money into nowadays you have this unsolicited, unorganized international university of WhatsApp, X, Y, Z, Instagram, YouTube, etc., where you have a lot of these gurus coming and giving you advice. My advice is to the young crowd who's over here, specifically I'm targeting the young crowd and of course the rest of the audience who's present. Please, for the love of God, don't listen to those gurus and invest your hard-earned money into those companies. That is the biggest mistake that you will be committing. If making money was so easy, that's what we were discussing a while back. If making money in stock market was so easy, there wouldn't have been poverty, not only in India but anywhere in the world. Why? Because every person would have a smartphone, would download an app, a trading app on the smartphone, listen to those Gyani gurus and start making money. So my humble request is, please be very careful about such information which is freely available. Please do not believe that as a gospel truth and start investing in those kind of companies. That will be the biggest blunder that you will be committing. So now coming back to the growth story that I was talking about. We are currently the 5th largest economy, and we are at 4 trillion plus, and we are possibly placing ourselves to become the 4th largest economy, surpassing Japan. This will happen in the future. Our problem, friends, one thing I've realized is when I meet a lot of people, as Geojit, as a responsible organization, we have this programs that we conduct along with mutual funds, and that program is called Investor Awareness Program. So I travel along with my colleagues length and breadth of the country, and one thing that I realized over the last couple of months, we lack confidence and courage when it comes to our capability and capacity. We need foreign brains to tell us what we are doing in terms of our economy, in terms of our equity market, in terms of our corporate performance, in terms of our GDP growth rate, in terms of our inflation, interest rates, etc. Where it is very evident and clear in front of us, why aren't we able to read that? Why aren't we able to convince ourselves that no, we have the capability and capacity to go to the next level? Unfortunately, that is something that I witnessed, I have experienced it. My humble request to all of you all is that if you all are not convinced or you are not confident, then your goals and objectives will become equally more difficult. But once you are convinced and you are confident, achieving your goals and objectives will become much more easier. So my understanding, friends, even during COVID time, friends, when there was lockdown, we reached out to our clients via, that time Skype was there, now Skype is not there, now Zoom is there. So we reached out to our clients via Skype and Zoom. We had meetings We encouraged our clients, we explained to them that yes, this is a difficult time. We may stay and struggle over here for some time, our economy may struggle for some time, corporate earnings will struggle, interest rates, GDP growth rate, everything was looking down and out. But that was the time when we actually have to build your courage, build your confidence, and start looking at investment opportunities. So like I was saying, if you put your money in bank FD, you are not going to reach your objective. So the next alternative is, like some of you mentioned, mutual fund. SIPs are the best medium to get invested into the stock market in case if you don't have time, capability, energy, experience to understand stock market. If you have that, then I think identifying stock market opportunities directly is something that you will definitely get. I was talking about a run rate. So we expect roughly approximate going forward a return of about 12 to 15% on index, okay, and on sector and stock specific maybe 15% plus. You could get better in case if the situation has to get better, and if you have the ability to identify those kind of investment opportunities from a long-term point of view. One of the other important things, friends, that has happened over a period of time, I mentioned about implementation of GST a couple of years back, which was taken with a lot of negativity. The last month number stood at about 1.89 lakh crores, if I'm not mistaken. And this is a historical high number with respect to GST collection. This number is going to go up again. The target is somewhere close to about 2 lakh crores with respect to GST collection, and I don't think it's going to be very, very difficult. The way opportunities are evolving, I think this is going to be a major game changer. And one more thing, friends, a lot of people think that after making policy changes 1 or 2 here and there, government is going to stop making policy changes. I beg to differ over there. Time and again, whenever the opportunity or the time arises, government has stepped forward and taken appropriate steps. Existing policies were amended, new policies were put in place, which will enable growth and consumption in India, and along with that, improving the standard of living for a common citizen in India. So my understanding is that this is a great opportunity, friends. If you have not allocated your capital towards equity market, either via mutual fund or via SIPs or via direct investment, I would definitely encourage you to start doing that. One example I'll give you, the recent data, that is the last month data that was given by Association of Mutual Fund of India, AMFI. The inflows, that means a retail investor getting associated with Indian stock market, either via mutual fund or via direct investment, has gone up to a new record level high. And let me tell you, friends, we are a population of 140 plus crores. We are currently just about 5 or 6% of this total population which is associated with the stock market. If this percentage has to go up by 3% also, we will not need any FI in India, to be very honest with you. Already we are capable enough in terms of taking care of sell side numbers from FIs, but even if this percentage has to go up by 3% or maybe 4%, then you know where we are landed. So the flows will come in, domestic institutional investors. Only problem, friends, is identifying growth opportunities. So to take care of that, you all must have also heard about IPOs, initial public offerings, right? So there was a lot of IPOs that came in the last 3 to 6 months. There is an anticipation that the year 2026 is going to see a flood of IPOs coming in, which will take care of the excess liquidity. So there is also fear, that too much of money chasing few stocks, that leads to valuation bubble. But when you have new paper coming into the market, excess liquidity is also being taken care of. In terms of other pointers that I wanted to speak about is, this is one of the most important things that I wanted to highlight. The second quarter earnings that we are witnessing right now, friends, before the second earnings started, corporate earnings, there was a lot of pessimism in terms of India's corporates' capability to deliver on numbers. There was an obituary that was written for some sectors like information technology because of the US related news flows, because of the H1, F1, B visa, etc., etc. But the standout performer as of now, up till now, whatever numbers we have seen, has been information technology, on which A lot of people had thought that this is not a sector that you should invest in. I would again beg to differ. I think information technology is going to stay here for even longer. The only thing is how companies are able to cope up with the evolution of change that is happening in information technology. It has been taken care of. Other earnings that we have seen, friends, that has also been up to the mark, though there are a lot of second quarter earnings that we are still yet to see. But my understanding is that whatever remains to be seen in terms of corporate earnings, that is also not going to disappoint us. And with respect to the third and the fourth quarter earnings and the next financial year, my understanding again is that we will have a better shade, a better color on corporate earnings front when it comes to delivering according to the expectation of the street. One of the most important things that we will be looking forward in the next couple of months is the budget. Expectation is that it's going to be again a budget which is going to be reform oriented, creating job opportunities, taking care of unemployment, taking care of one of the most important activity in India, that is agriculture, which employs large part of our population. And of course, if you are taking care of your feeding your people via good policies for agriculture sector, I don't think we'll have to depend on imports as far as agri activity is concerned. With this, the big question is where to invest. I think I have listed down some 6-7 sectors which are likely to do well on fallback of government policies, more importantly, and more importantly, the opportunities that are likely to open up with respect to foreign orders coming into the Indian corporate order book history. What are those sectors which we feel will do well? Starting with defense, you know, when Hindustan Aeronautics Limited initially was working on a light combat aircraft called Tejas, there were a lot of challenges that Hindustan Aeronautics faced in terms of technology failure, in terms of avionics, in terms of controls, etc., etc. Fast forward to the current present scenario, Tejas is already inducted in the Indian Air Force. Tejas is also inducted into the Indian Navy. And very recently, we saw the first next generation Tejas Mk1A aircraft getting inducted into the Indian Air Force. And by 2030, you are going to see the 5th or the 6th generation light combat aircraft in form of Tejas Mk2A, that is Mark II, which will have a capability of carrying supersonic missiles under its wings, close to about 4 on each side. So this is the kind of opportunity that is going to come up, friends. We unfortunately are not seeing what is there in front of us, what is lies in the future. We always depend upon seeing what our present is, and we repent what has happened in the past. I think we should come out of that and look at present and future rather than looking at your recent past and the past history. Sectors like I was mentioning, defense, banking and finance. Why banking and finance? Because remember one thing, friends, if India has to move to the next $1 trillion economy, if India has to move to becoming a large manufacturing hub, line of credit is going to be a very important thing. Without financial support, we cannot get there. So banking and finance will do well. Already they have started to report good numbers. Stocks related to the Indian capital markets. For example, if I am telling you that our capital markets is approximately likely growth of 12 to 15%, if you compound it for the next 3 years and 5 years, see the magical number that will come in front of you in form of Sensex and Nifty. You will be surprised. So if the stock market is going to do well, stocks associated with the Indian capital markets is also likely to do well. Consumption related. You know, I often tell a lot of people, and I'm sure most of you all will agree with me, that India was, India is, and India will remain a consumption driven economy. The kind of population that we have, counting and growing, consumption is not going to stop. It may slow down during difficult times, but when times turn around and good times come, again spending is going to go up. So consumption related stocks, especially post the tax relief that was given by the Honorable Finance Minister with respect to good monsoon, capability to spend by semi-urban rural India, and the new avatar of GST 2.0, spending is going to go up. So consumption related stock will do well.
If India is going to get a run rate of 6%, 6.5 or even 7% as we go into the future for GDP, it's not going to come on its own. We will need to create infrastructure, modernize the existing infrastructure. And when we do that, we will consume a lot of cement and metals. So cement is the other sector that we believe is likely to do well. Power is going to be a growth driver. According to some data, friends, individuals like you and me are consuming more power every day. Consumption of power is going up. That requires the government to set up more power manufacturing capabilities and capacities. One report I was reading, friends, there is close to about 300 to 500 gigawatts new power generating capacity that is going to come up in the next 3 to 5 years. 75% of this is going to be clean and green energy. So power generation, and without power you can. For example, if there was no power, there was no light, no AC, would you and me be sitting over here? No. So power is going to be an integral part in terms of investment theme. Last but not the least, I think one sector that has been buzzing from 22nd of September, that is autos. I'm sure you all must have read about the kind of sales number that two-wheeler, three-wheeler, four-wheeler and commercial manufacturing companies have registered. This is just the beginning. I think not only in India, but export market is going to be a big opportunity for automobile manufacturing companies in India. You all must have seen Hyundai cars, right, on Indian roads for 20 years. I believe they have been in India for 20 years. Why did they get listed just last year? Have you ever questioned that? It is only because this is the growth opportunity. And they see India as a big manufacturing hub. And those days are not far away when India used to source from the world. Those days are not far away where world will source from India. This is the strong belief that I have. So if you have not allocated capital, my humble request is, other than, I'm not saying don't put in FD. As a principle of investment, you need to diversify. But don't invest a lot of money of your hard-earned saving into asset classes that don't achieve your goals and objectives. That is my humble request. Look, investment into equity is also exposed to all kind of risk, locally as well as globally. So if you have the capability to take risk, I will warmly welcome you to the Indian equity markets. And if you are happy with that lower single digit, then I wish you all the very best. And this is what I wanted to say. I hope I have not encroached upon the others. There are any Q&As. I would love to take Q&As if there are any Q&As. Okay. Yes, please.
Yeah, thank you for an insightful session, sir. My questions regarding the...
No, you are loud enough, no problem.
Yeah. Go ahead. My questions are regarding the scale of investments in AI, especially in the US markets.
Okay.
I'm sure you know that it's compared to almost 20 times the dot-com crash and several times the 2008 crisis. So how serious a threat is this? Is it an AI bubble? And if it is to pop, what kind of ripple effects are we expecting for the Indian economy and the global economy?
Well, I would love ABK sir to answer this question in case if he wants to do that.
Okay.
But yeah, I'll try to answer that depending upon my capability and capacity. I did not want to say this statement this evening over here, but since you have mentioned about US AI and the bubble, honestly, friend, I think US markets are history. And that's why my opening remarks were that Wall Street is history, Dalal Street is the future. Valuation wise, and in terms of the policies that are being put in place in US, my sense is that we are closer to valuation reaching its peak level and delivery in terms of performance, capability and capacity not matching up to that valuation. So if you ask me, should I invest in US IT giants, I would say India is a better place. With respect to US, there is another problem, friends. US debt instruments can go bust anytime. We already know US is in the 4th week of shutdown, which is the longest in US history, if I'm not mistaken. So while US, and let me be very blunt over here. Look, you will get the kind of fruits depending upon what kind of seeds you are sowing. So if you are neglecting rest of the world, and to be very honest, I may sound a little bit hardcore or blunt over here. According to President Trump and under MAGA, that is Make America Great Again, he wants large corporates all over the world to come and set up their manufacturing capability and services capability in America. President Trump is going to stay as a president for next 3 odd years, if I'm not mistaken. Can you actually shift from India a manufacturing capability or the services capability and set it up in America in 3 years' time and make it profitable? You can't. My second question is, even if you are capable of doing that, shifting your entire capability capacity from anywhere in the world to US, land, labor and laws, that is the 3L in America, cost is high. So no way you are going to make a product which is cheap, which will compare to products and services which is sourced from other side. Please correct me if I am wrong over here. So to answer your question, I hope they wake up and they smell the coffee. Any other question?
Sir.
Yeah, I'll come one by one.
This is a famous statement by Warren Buffett. Never bet against America.
Never bet against Americans.
America.
America. Yeah, to a certain extent, I would say, I mean, of course, Mr. Buffett is something that all of us respect and have great regards. But at the same time, with the kind of policies that are being placed in US, I think it is time for people to realize that US had a dominant role to play up until now. But that, according to me, is diminishing. It will not happen immediately, but it will be over a period of time. So I'm sure Mr. Buffett will also look at other geographies in terms of investing his money into growth opportunities.
Hello, sir. I'm one of the students from Graduate Business School. I want to ask, given the recent AI bubble that's coming out, and like I said, our investment really pertains to information, what kind of newsletters can you suggest to us, sir, that we can get more accurate information on the stock market so you can invest more accurately?
So accuracy, so there is no 100% accuracy. Even I'm not 100% accurate, to be very honest. Look, I'm also human, okay? So I can also hear. So there is no. So your question is basically, if I am not misunderstanding is, I should not go wrong if after I make an investment.
Yes, sir.
Right? Precise? That I should not make loss. You should not come to stock market then. Like I said, stock markets all over the world are exposed to all kind of risk, whether it is locally or globally, and there is no sure short guarantee about, first of all, about your capital, and after that the return on your capital. There is no guarantee. So you can end up losing all your capital, or you can end up making your capital 2x. This is what stock market is all about. That's what I said. If you have the high risk appetite, you then come to the market. If you don't have it, stick to your ABCs basics. So, and as far as you have to learn, well, there is an institute called Institute NISM. It's got a website. You can go over there. They've got a lot of courses. NISM. You can log on to that. Whichever course you feel is right for you, you can register for that. You can download a workbook. After you do your due diligence and study, you can give an exam and you can certify yourself. That's very basic, but you can do that. But it's very good. Sir, you had a question?
Yeah. What is the 5 most important thing Government of India has to do to accelerate the growth to 2 digits?
I don't think I'm capable or qualified to even put one step forward for that. But yeah, I mean, what I expect, look, the general expectation is that government should possibly, according to me, again, and I mentioned it, that it's going to be a growth-oriented budget. It's not going to be a populist budget. It's going to be a budget which is going to be reform-oriented, and that's what we've seen over the last couple of years from this government. It's been a budget which does not make people happy in terms of giving freebies or giving free allowances, etc., etc. So I think employment, making policies more conducive for foreign direct investment, not for equity, but for manufacturing and services industry, simplifying laws. One thing, because I'm a capital market guy, get rid of long-term and short-term capital gain tax. I'm being selfish over here. And fifth is have consistency. Don't change your laws like we had retrospective thing some time back, which is again done away, but have consistency in whatever laws you do. This is what I would possibly say.
Sir, your opinion on AI tool aided equity advice.
AI tool.
With the help of AI tools, a lot of equity advisory has come up.
I will invite my friend.
No, I think, see, there is a lot of talk about AI. What AI underneath is comprehension. You know, you're not inventing new information. Imagination is not the power of AI. AI can only comprehend what is already. So, for example, I run a company called Lotus Dew Wealth. I work with Geojit on some of the aspects of investment. What we do, I'll tell you exactly what we do with AI. Right? We score corporate governance of listed companies by looking at the board members of listed companies and where they studied, where they worked, how good those institutions are. We use it to extract unstructured data into structured data and then process it. Those kind of things can be done, but actually inferring whether AI can actually give you superior returns, it's still early days. We are working on things like scoring pre-IPO documents based on a calendar. So those kind of work is possible. If you think that you can kind of push a chart to an AI and it's going to tell you whether the stock is going to go up or down, that's not really how that works. So I think you have to taper down your expectation of what AI is, and it needs decades and decades of experience like him to actually master the market.
Yeah, my first question related to, you talked about defense is very important area, it's a traditional things. Likewise, shipyard, because we are also produced INS, most of the people are also very much eager about shipyard. If you are investing something on shipyards, it is also worth investment. Second question.
Yeah, please go ahead.
I talked about SIP is the most, compared to all the plan that is there, how can you explain how it is more worth?
Okay. So I'll try to answer your second question first. Please.
One more question.
Yeah, please. Please go ahead.
You didn't mention about the private sectors like Tata, Reliance and other things. Why?
Yeah, okay. So now I'll start with the third question first. So before I stepped in over here, I was asking ABK sir about my borders, how much can I speak in this forum and what is it that I cannot speak. He was kind enough to tell me you are at free will to fire. So the reason, see, I can speak about Ambanis, I can talk about Tatas, I can talk about Birlas, I can talk about a lot of companies. I think we'll have to possibly arrange dinner for everybody then in that case, because it will go into late night. So I purposely held on to it because I wanted you all to ask me questions. So to answer your questions, okay, now we are stock specific. So we are positive on a lot of Tata Group companies. We are positive on certain companies from Mukesh Ambani Group. We are positive on certain companies which are from Godrej Corporate House, Birla, etc., etc. If you want me to be stock specific, do you want me to be stock specific?
Yes,
Yeah?
please.
I should not have asked that question. Okay. I'll name a few. I hope you all have smartphones. You can take it down, or if you have a pen and a paper, you can note it down. And I'll try to go as slow as possible so that you can take all these names down. So from the Tata Group, to start off, we're positive on a company called Tata Power. I spoke about power sector. We're positive on Tata Power. I spoke about autos also in my last sectorial pick. Tata Motor is one of the most underperforming stock as of now because of issues that it is facing because of the high-end premium segment Jaguar Land Rover, that is JLR.
What about electric vehicles?
Yeah, so Tata Motors also manufactures a lot of electric vehicles. They are going to launch at least 4 models. 2 of them are going to be a new avatar of old models. If you remember, there used to be a car called Tata Sierra some time back. They are going to relaunch Tata Sierra in ICE as well as EV mode. Both options will be available. So we are positive on Tata Motor, we are positive on TCS, we are positive on Tata Consumer Products Limited. I hope I'm not going fast. If I am, you can please stop me. And we are positive on Tata Steel. So this is your Tata Group companies. On Reliance Industries, flagship company Reliance Industries came out with a stellar set of numbers last week. We are also positive on one of the financial companies of Reliance Group, that is Geo Financials. As far as Godrej is concerned, we are positive on a company called Godrej Consumer Products Limited. You asked about shipping companies.
Shipyards and shipping.
I don't think I'll be able to take a flight tomorrow back to Bombay if I don't mention Cochin Shipyard. So we've been positive on Cochin Shipyard since the time its IPO was in the market. Very long. Correct me if I'm wrong. We advised that subscribe for the IPO, and we are currently holding a positive coverage on Cochin Shipyard. Along with that, we have a positive coverage on a company called Mazgaon Dock. Other than this, of course, we don't have a coverage on these companies, but there is one more company called Garden Reach Ship Builders. There is one private sector company which is contributing to a great extent to the Indian defense sector, and that is Larsen & Toubro, LAT. They are making semi-submersible vessels, submersible vessels, as well as fighter vessels for the Indian Navy. Other than that, I mentioned one company in my course of views as far as India's exposure to the international market, that was Hindustan Aeronautics Limited. Then there is BEML. We have another company called Bharat Dynamics Limited. These are all the government related, most of them are government related companies which are doing quite well. There's one more company on which we have a coverage called Bharat Electronics Limited, BEL. I hope I've answered all your 3 questions, sir.
Did you miss Mahindra?
So ask me questions. I will never.
Why?
SIP. I'll come to you, sir. SIP. So, since I'm one of the sensitive persons working in my company who represent Geojit at various platforms, print, electronic, news channels, etc. So there is this compliance that I have to take care of. So I'm not supposed to invest directly into equity markets because compliance doesn't allow me to do that. The best thing that I can do, friends, is that I can invest in Indian equity market via mutual fund SIP, Systematic Investment Plan. So sir, I've started doing SIP from 2004. I started with one SIP of a very small amount. Currently, there are 5 SIPs getting debited from my savings bank account between 1st and 10th of every month. You understand what I'm saying? 5 SIPs getting debited from my savings bank account, auto debit from between 1st and 10th. Can you tell me the logic of between 1st and 10th? Anybody? Why did I choose between 1st of every month and 10th of every month that all my 5 SIPs should get debited?
Payment day.
Exactly. I get my salary on 1st. So the first SIP that gets debited is on 1st, and then rest of them gets debited before 10th of month is over. So I invest first and then take care of my expenditure. By the virtue of doing this, my expenses have come down automatically. So, I hope I have answered your SIP also, sir. And it is a multiplier. Small amount will not pinch you. But when you look at 3 year, 5 year, you do the compounding, that's when the magic happens. And they say, compounding is the, people who don't know it, give it. People who know it, take it.
Sir, your comments on precious metals.
I'll come on that, sir. Before that, gentleman had a question on M&M. I'll come to you also, sir. Sir, M&M has been on a buy list from the time I joined Geojit. That is almost from 2004. And it is still in our buy list. It is one of the most well-diversified company in terms of automobile exposure and the product profile that they have. Not only in terms of SUVs or PVs, but also in form of agri equipment and tractors. I think if you have to pick one stock in the auto sector, four-wheeler, then it has to be M&M.
So tire, automobiles won't move, Which tire company will?
Without tire, your cycle will also not move. So you don't have 4 tires, but you have 5 tires in a car. One is in the stepney. So my pick is, I'll come, one by one, sir. Let's have some. So we like a company called JK Tires, and there is one more company called Bal Krishna Industries, goes by the name of BKT Tires. We have coverage on these two.
So Apollo is from Kerala.
Yeah, I know. I saw the factory while I was. So we had coverage on Apollo, but our price targets was in place. So currently we don't have a coverage. We had coverage on CEAT also, sir. We had coverage on MRF also. But all those have shot up to a great extent, and we have not covered it. Yes, sir.
Yeah. Your comments on precious metals are right now gold and silver, because both of them are moving highly volatile nowadays.
I need to drink water before I answer this because it's very long.
So other than equities, friends, one asset class that I got attracted towards way back in 2007-2008 was gold. Along with gold, silver and platinum also. But my focus centric was gold. At that time, gold prices were about 7,500 tola, right? 10 grams. Today we have seen a high of 1,30,000 and then it has retraced somewhere close to about 120 or 122. At that point of time, my boss told me, "You are a fool." ABK sir. Not ABK sir, but my other boss. Because they thought that it is a useless asset class to invest in. I humbly surrendered to that fact without any counter arguments. But as I said in my opening remarks, that one of the principles of investment is that you have to diversify. You have to put in whatever your capability, capacity is, you need to diversify accordingly. I remain, though at current levels, I remain positive on gold as well as silver as well as platinum. Unfortunately, on platinum in India, you don't have any products where you can invest. Whereas in gold and silver, you have gold Bs, silver Bs, and you have mutual funds, or you have fund of funds for gold and silver where you can invest. Gold gave you a return of 58% in the last 1 year. Silver gave you in excess of 60% last 1 year. And platinum has given you a return of 70% excess in the last 1 year. My view is that after this kind of a rally, it has to correct a little bit. Nothing is going to defy gravity, right? Everything will fall and then consolidate and go up again. I expect all the precious metal prices to move up over the next 3 to 5 years kind of time horizon. If you have not started, or if you are planning to start, if you think buying physical gold is cumbersome in terms of safekeeping or immediate capital required to buy that precious metal, then these two options are there. And for gold, I think government had started gold sovereign bonds, it stopped it in between, they have again started it. So you have the third option in form of gold sovereign bonds also. Do a sip in gold, silver and platinum. Platinum, unfortunately, sorry, no platinum because there is no product available. Gold, silver, do a sip in that also, like you do sip in equity. Take it over a period of time. Don't ask me the kind of price targets that I have, because either you will have a smile on your face or you will kick me out of the hall.
Some capital market companies and IMCs.
Yeah. So asset management companies, there are two of them on which we are positive. The first one is the star performer HDFC AMC. The second one is Nippon India Asset Management Company. These two we have coverage. Capital market related stocks, we have coverage on one company which is known as Computer Age Management Services, CAMS. But other companies are also there, services related oriented companies like depository services are there, NSDL City, they are also good companies. You have platform like BSC. There is a likely possibility of an IPO of NSE also, once they get clarity and approval from the issues that they have been dealing with. Yes?
And what is the average return a person can make from a share market? That you see that it's a fair. And what about these NBFCs? They give a guaranteed return. So.
Please don't fall for guarantee. There is nothing called guarantee in stock market. Please take my word for that. If they are giving you, if they are telling you this is a guarantee, please take all your money back. Don't invest in that. In terms of index return, I told you between 12 to 15%. That is Nifty and Sensex. And if you are able to identify a good sector, growth-oriented sector, like I mentioned about 7 of them, possibly 15% plus kind of run rate per annum cannot be ruled out. I'm a very conservative side. Sorry, this gentleman, I'll come to you, sir.
Sir, as far as you said, steel is concerned, Tata Steel is there and powerhouse of Tata is also there. How do you think SAIL would be a big opportunity for us to invest? And powerhouse, as like in Jharkhand, there is a lot of consumption of power by DVCs and everything. How do you think that will emerge in a longer period of time?
So my humble request is, I hope you are not talking about SAIL because of the price of the stock.
Like a range of the company.
We don't have coverage on SAIL. We don't have coverage on, we used to have coverage. Our targets were in place and we have removed the coverage. So if you want to look at steel sector, other than Tata Steel, JSW Steel, JSPL, Hindalco, Vedanta, Hindustan Zinc and NMDC. These are the ferrous, non-ferrous, diversified plays that we have coverage.
What about
Tell me, sir.
Pharma and the telecom sector?
Pharma and telecom. I'll come to you, sir. I'll come to you. Pharma. Look, one fact that a lot of us forget again is that India was, India is, and India will always remain a pharmacy to the world. This fact nobody can take it away from us. There is not a single country which can come up in the next 3 years, 5 years, which can stand shoulder to shoulder with the kind of capability, capacity, R&D, manufacturing capabilities that India has. So there are a lot of stocks that we have under coverage. I'll name one or two of them. Cipla is one of them. Sun Pharma is the other one. Gland Pharma is the third one. In the healthcare related sector, we have coverage on Apollo Hospital, Fortis Healthcare, Max Healthcare. In the diagnostic sector, we like a company called Dr. Lal Path Labs. Which was the second? Telecom. Telecom, we like two names, which are the largest two players. Reliance Industries, because of Geo Mobility, comes under its balance sheet, and Bharti Airtel. These are the only two coverage. So please don't ask me about Vodafone.
Sir, you have already given many advice to buy the shares. I am talking about the exit strategy. This is, for example, just see. I bought a Tata LXC at 394, and I have even not sold when the price has gone to 10,700. Now I think it is around 5,600. So this is also applicable to Natco Pharma or Oro Pharma. Same thing.
You know, there is something that in the stock market that you should not have, especially to all the young beginner students who are here, and also to the other guests who are mentioned in this audience. If you have greed, there is no full stop. Greed will make your profitable investment also loss making. You bought it at
394.
394 only. Tata Elxsi saw a price of 10,000 rupees, did not sell it. Now you are repenting because you are seeing a price of 5,000 rupees. I don't know whether to laugh or cry on this. To be very honest, my good friend, at 10,000 rupees, I don't want to know how many shares you have, but even if you would have sold a fraction of percentage, then you don't have to, then don't cry. Be happy. So again, exit strategy, again, one thing is there. Look, this is what I wanted to ask. I'm glad that you asked me this question. When you put your money in bank FD, do you go to your bank manager every 3 months and do you ask him how much interest I have made on my deposit? Do you do that? No. At the end of year, you simply say either renew or credit it to my savings bank account. Right? But in stock market, when you're getting even 20%, you don't want to take that profit. Why? Because your greed is 2% more so that my brokerage will be taken care of. Right? This is the approach. But then in that greed of 2%, your 20% will become 15, 15 will become 10, 10 will become 5, 5 will become -5, -10, -15. Have you all experienced this? Yes. I'm sure you would have, nobody wants to agree with it. So the point is that if you made a good investment, sir, or everybody, don't, if the company is good, if the earning is good, if the management is good, if the product service is good, don't sell your entire investment. Sell 25, 30% or maybe 50%. Bring home your capital and profit and redeploy it into some other growth story. By sticking to or getting married to one stock is not going to help. And marriage happens only once in lifetime, right? And once is more than enough. Have I answered your question, sir? Thank you so much.
Last 2 questions. Yeah.
Yes, sir.
I'm not going stock specific.
Yeah. No, you can go stock specific.
No. I'm going to back to your original thing of called geopolitics or whatever it is. In that one, what we see is Trump and his policies, every day something new is coming, new types of pressures are coming. India is sort of staying back and quoting your words itself, which all of us are saying, acting very maturely. We're not doing that. Does that mean that if this thing goes on, I'm sure that India has got some trumps in the pocket, which we are not yet playing our cards. And shifting that to one possible thing is when they keep on announcing the tariffs, it's always a one-way thing that you hear. States will have to come in and say, okay, we'll also start putting tariffs on your stuff. If so, which areas are likely which we as stock investors in India can fight that against? I've combined the two.
So I don't think, look, one thing that India and Indian government believed was, and is very truly so, is not going tit for tat. We have always said that during the time, since the time the tariffs were announced, that we are open for negotiation. We have never said that we are not open for negotiation. We have never said that, okay, you put tariff on so and so things, we'll also put tariff on so and so. We have never said that. We are open to negotiation, and look, trade agreements don't happen as desired by President Trump. Trade agreements, viable trade agreements, agreeable to both the counterparts, happen over a period of time. And for that, dialogue and time is necessary. So, I don't know what trump card government have, or I'm sure they will be having some, and that is why they are so confident, and that is one of the reasons why the Indian economy or the stock market or the earnings have not taken a huge negative impact, including information technology, which was one of the biggest losers of Trump policies. So there will be something, and like I said, look, we signed a trade agreement UK trade agreement took almost about 3 years for signing FTA with UK. Likewise, with 4 European countries we have signed, rest of the Europe work is in progress, possibly very soon we will do that. Similarly, we are talking to, as far as our aquaculture is concerned, fisheries, shrimps, etc., etc. We have started talking to Australia and New Zealand, so that the negative impact of US tariff, which is there right now, will get into a positive. So this is an evolving process. That's why I said one of the most important thing I mentioned in my opening comments is that whatever government has done is not the end, this is just the beginning. in terms of policies. Yes.
Thank you, sir, for your very frank presentation. You have made all of us happy.
Thank you so much.
So I just want to ask you, for selecting the mutual funds, can we go by the rating of the rating agencies? Don't only go by. Sorry.
So look, so nowadays lot of transparency has come with SEBI. Not only your mutual funds are rated, but also your IPOs are rated. They are ranked. They are given colors. So my humble request is, yes, you can definitely do that. Only one thing I will say is that if you are a beginner, then stick to large cap or a balance of mid and large cap. Don't go for small cap, micro cap, or a thematic based, sector based mutual fund, because then that is a little bit riskier. So stick to large cap preferably, or if you have the ability to digest a little bit more risk, then keep a mix of large and mid cap. Stick to that.
Flexi cap, you mean?
Flexi cap, yeah, flexi cap.
I have one last question.
Please, sir.
So, what is your thought on cryptocurrency?
Interesting question. Can anybody tell me which is the regulator that regulates cryptocurrency? Has anybody seen size, shape, color of crypto? Has anybody, any single government taken an undertaking like you have an undertaking on a currency note that I will fulfill the obligation of the amount of the currency note? Has anybody? And my serious take on crypto is, if you all have invested, God bless you.
Thank you, sir. May I invite Past President Vibhu Punaran to hand over a memento to the guests.
To bring this evening session to a close and to express our collective gratitude, may I now invite Dr. Anil Varma, Treasurer of KMA Management Association, to deliver the vote of thanks.
Good evening all. So it was indeed a great evening, and the time for question and answer session was more than the talk. So that implies how important this talk was. So respected chair of the program and Vice President Dileep, the man of the evening Gaurang H Shah, and the delegates, students and MC members, past presidents. It was a great evening. Lot of things were shared, and I know that one important thing, that Wall Street has nothing to do, because all the questions were on Dalal Street. So Wall Street is not much affecting the Indian economy, and it's a very important policy that India can stand on its own feet is the message which is being discussed. Nobody thought about any questions about the stocks in US. Everybody was discussing our market, and I was looking that everybody was making a note. Rather than, I am not into this sector, so it was Greek and Latin for me, but I found that 80% of the crowd is making note where to invest. So that's a very positive time. One thing my father told me long time back when I first started investing in shares just out of engineering college is that share business is one where the man who sells that believes that he has made a profit, and man who buys also believes that he has made a profit. So it's a tricky situation, and that is which was very much conveyed here, but lot of carry home today. Lot of sectors, and why that sector is going to perform, and why and what is the future and where we are heading into,
And very interesting to note that we are not dependent on American policy, even though it is the world's largest economy and controls. And it's a matter of volatile situation, and it is not a crystal clear, but I also strongly believe that it's a business policy they are imparting to all the countries to get the leverage on their market. Like we say, Atmanirbhar, they want to come up with Make America Great Again. And it's a matter of time we settle down and bring the situation into control. But the most important thing is that we are standing on our own. Recently, I had an interaction with our Union Minister Gadkari in a special invitee of 40 engineers called to Nagpur, and I was one among them. And he was telling that previously, when India planned for the growth, our money used to come from Japan investment or French investment or other investment from abroad. Now we don't call for. We call open, go to our market, open the stock, and we want to collect a funding for a big project. They opened it on Monday, and they had about 10 days to close in Bombay stock market. I'm not very familiar of how this works, but he says that the third day it was oversubscribed, and he has to go there and put a bell or something like that. That session is closed. That the power came from the common man of India. That entire money was subscribed by 5 times more within that period of few days, and he has to close the scheme. And it is not from any foreign direct investment. It is the common man of India who was pumping to develop the infrastructure which is needed for our country. So thanks a lot, Gaurav, for bringing in so much of valuable knowledge in this particular field of share market and the investment. And I am very happy to know that our younger generation are very active and dynamic in this share market field. And again, we should thank APK, the man behind this, for bringing the person today to share this valuable knowledge. Also, we have a very interesting personality, a man who works on a specific subject, Abhishek Banerjee, with his head here. And I know today, if we continue like this, we should have been forced to do dinner to all of you. So I want to close before 8 o'clock because my chair clearly told that after 8 o'clock it will be too long, we have to plan for dinner. So I close up here with the thanks to each and every one of you who came in here, and made that special thanks to our MC members, Lekha, Nivedin, and other people who are there, our past president Bibu Punuran, ABK, and all the members of KMA. And this audience is what make our KMA activities so lively. Look forward to seeing you. We know it's already announced by our vice president that we are having the digital summit coming on October 13th. So hope to see you on all there, where the transformation in digital area happening will be discussed there. And once again, thank each and every one of you for being here and making this evening a great one. And once again, my applause to Gaurang H Shah for the wonderful performance here and making our day stronger. Thanks a lot. And let's all, I think they will announce for the national anthem. Thanks to the MCs.
Thank you, sir, for the thoughtful words and appreciation and acknowledgement. As we conclude, on behalf of the Kerala Management Association, we express our heartfelt appreciation to our distinguished speaker, our esteemed guests, members, and participants for joining us this evening.
We hope you find the session informative and engaging. Thank you all once again for your presence. Have a great evening and a safe journey home. May I now request everyone to please rise for the national anthem.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल गंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तब शुभ आशीष मांगे गाहे तब जय गाथा जनगण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you.